look at Uber. Biggest quarterly loss ever for that company, about $5 billion plus. Market watcher Joel Shulman is with us. Joel, look, you're an entrepreneurial investor. You invest in entrepreneurial companies. Right. I think of Uber as an entrepreneurial company.
It is an entrepreneurial company. It is.
Well, would you buy it now?
No, I wouldn't buy it. We didn't buy it. So first of all, you know, there's some issues related to Uber and the CEO, which we talked at a prior show. So that's one reason why we wouldn't buy it. We also don't buy IPOs. This is an overpriced IPO. They fell quite a bit from where they originally came out. This is a $72 billion market cap company. It's trading about 5.3 to 5.5 times. Its revenues similar to Lyft, which is an $18 billion company. This is a company that's the one good thing about Uber. I will say this: they put about $3.4 billion in R&D, which is up 750% from last quarter. So the R&D is way up. They're looking at some residual things. By the way, these are telltale signs of entrepreneurial companies, which we do like. But this is not a company we would touch anytime soon. Most of the losses were related to compensation from from investors who came in early on and employees, and so that loss may disappear for future quarters. But still, I think it's overcompensation for the existing people who are currently involved in this organization.
However, I think of it as a brand new industry.
Right.
It's the kind of industry that I want to get into.
Right.
And I would like to get into it pretty soon. Am I jumping in too fast?
Well,
he says he's going to start reducing the losses in 2020 and 2021.
We like to come into companies between 6 months and a year after IPO, because there are a lot of investors on the sidelines. A lot of locked up investors, venture capitalists and so forth, which there are a lot with Uber. They're looking to get out. They're locked up for 6 months to a year. So once they get out, the stock price is probably going to be very volatile at that point.
They can get out in November, actually.
Okay, so right after November, we'll start looking at it. And Facebook was an example of this. There are a lot of people that had downward pressure the first year. We did not touch it. We came in after the first year, and it's been a rock star.
Would it be fair to say that you're looking for a washout, maybe later this year, after November, and then you think seriously about it?
We'll consider it. We do like to see companies with that have opportunity to cash flow positive. There's a lot of competition coming in here. Uber has a lot of initiatives on the sidelines. We do like the R&D that they're pouring into it, but we're a little concerned about some of the issues related to the CEO. There's some controversy with him.
Stay there, please. Got more for you in a moment. Okay. Let's move on. Bloomberg reports that the White House is delaying a decision on giving American companies licenses to do business with Huawei. Susan, I thought that we'd said, okay, you can do business.
Right.
Now we're saying, wait a minute, maybe not.
Okay, if you get a waiver. And of course, the U.S. Commerce Department is looking at these requests. So far, according to Wilbur Ross, they have received 50 requests. A decision is pending, and it might take even longer, given that China, of course, has said that they are suspending buying farm goods. And President Trump at the G20 says, okay, we'll give some reprieve to Huawei, but that's contingent on China buying more agricultural goods. And so the fact that China is suspending the purchases because they say that the 10% tariff on $300 billion worth of Chinese goods that might go up on September 1st seriously violates that negotiation and that agreement at the G20 in Osaka.
Got it. Complicates it, doesn't it? Got it. Thank you, Susan. Back to Joel. Despite the wild week that we've had, I think you still think that the market overall goes higher for the rest of this year?
Yeah, we think it's prices are appropriately at an appropriate level. With interest rates, I mean, there's a lot of focus, a lot of concentration we're going to be hearing for a long period, as we have throughout the year, between the 10-year Treasury and the 2-year Treasury. A lot of institutional investors very nervous about inversion, which means the 10-year rate comes below the 2-year rate. And so we're going to be focused on that. Right now, it's 1.6, 1.7, 13 basis points, which is less than 1/10 of 1% for those who don't know what a basis point is. And so there's a lot of 100 basis points, 1%, so 13.
Got it.
So anyhow, so that's it. So the point is, there's a lot of focus on on what is a very simplistic term, but there's real money. There's trillions of dollars that are flowing behind this simple concept: one rate is below another rate. And so if that happens, we're going to see volatility in the marketplace. We generally like the market right now where it's priced. I mean, we saw the markets went down, they went back up. I mean, we had people have to remember it was an outstanding June, July was one of the best since the 50s, 1950s, and so we had a little pullback in August, but I think things are still well positioned.
Okay, so don't hit the panic button.
No,
Joel, thank you very much indeed.
Thank you.
Okay.